Today, I'm excited because we're bringing back, and from last year, John Carlson. I have him here in the studio with me. We're going to be talking about how to find multifamily deals without the risk of being a late mover in a cycle. Nobody wants to be that late mover in the cycle. When to wait to buy, that conversation, and get the data that we need to make those decisions. But before we jump into the interview, what I want to do is I want to say a few words about John. John is the president of Mark Taylor Investment Management Company. He's a great guy, and he's responsible for the strategy, the operations, the new business development, and property portfolio performance for more than north of 19,000 luxury apartment units here in Arizona and Nevada. Now, Mark Taylor is Arizona's single largest multifamily developer in the state, and they've built more than 20,000 units. So you can see why I would want to talk to John about all things multifamily. So John, welcome in.
Thanks for having me.
Nice to have you back.
Great to be here.
So just wanted to open up with, I mean, since 2020 and even through all of the pandemic that we've moved through, there was a lot of transactions that might have been on pause mode. Like, what's going to happen? How are things going to shake out? What are your thoughts about where we are now?
Yeah, I think of it as the old VCR pause button, which some of the audience probably won't recall, but certainly because of the pandemic and what transpired early in 2020, there was a lot of, I think, concern about what was going to happen, clearly, in all facets of life. And what's interesting about that is you had some pausing effect. And really what happened is, you can debate and argue where we are in the cycle, but what it did is it postponed some of those on-market deals. And it didn't mean they were going to go away. It just meant they were going to go later. So I think it had a compounding effect on what projects were going to market and at a later time. And as we've worked through the pandemic, we don't have all of the answers, but I think there's a consensus that the real estate market is of quality and a place you want to be, specifically in Phoenix. So if you look at all the transaction volume in 2021, record transaction volume for this cycle and all cycles, right? Going back to what we've tracked since 1985. So clearly there's momentum there. The question is, how long does that last? If you look at, go back to 2017, we had previous peak cycle transaction volume. So when I say transaction cycle, 2011 through 17 at the time. And if you said, wow, we're at peak here, you missed an opportunity, in my opinion. And it's not just opinion, it's fact. If you look at the price per unit. No, this is statistical. No. So if you look at 17, we had half the transactions that we had in 2021, and price appreciation 105%. So if you bought in 18, you were probably okay, 19 okay, 20 okay. So I've had guys come back to me that have never purchased a deal this cycle and saying, God, I keep missing this, right? So the question is, when does the cycle actually end? I'd say if you talk to prominent brokers in the field today, the acceleration of activity has happened with BOVs and potential listings for 2022. So I'd argue that you potentially will have more transactions in 2022 than the previous record-breaking 2021.
Nothing we've seen. I mean, what do you, with all the money, with the currency circulation and all the talk around like inflation and
it's a bad word,
purchasing power, all the customers that they're enjoying this, right? Where do you think we sit, I guess, economically around this? I know you're not an economist, but you have a lot of data, and you guys have been tracking that data forever. What's your take on like where everything is economically?
Well, inflation matters, and I strongly believe, as I think any major economist that you read or listen to on podcast or what have you, they say that it's really a theft on purchasing power or a tax. You could argue either one. And the word transitory.
To those most impacted, sometimes
that's right.
our customers.
So, absolutely. So if you think about the transitory nature of conversation, the transitory T-shirts, I think that myth's been debunked. And what I mean by that is if you track CPI, most importantly, I know there's flaws in that index. What does it actually collect in terms of data? But if you look back to post-World War II and look at the last 75 years, we've averaged 3.44% in CPI increase. There was never really any transitory type moments. You had some peaks, right? in the 70s, post-World Tour in the 70s, you had up to 15% CPI increase. So today, I think the concern is, if you think about if you use like the Overton window or the window of discourse, meaning what's acceptable in terms of public policy, I think if you look at 2 to 3.5%, 4% was pretty acceptable to most.
Right.
And if you go back to Bernanke and Yellen and now Powell, they said we're going to strive for a 2% CPR inflation growth number. The problem with that is, if you look at essentially from March of 2020 through really last month, we're up 10.2%. So previous to that, and just in a smaller window, it took us 7 years, 13 through 20, to get 10.2% of total CPI growth or increase. So it's the acceleration effect. So today I'd say that we're outside the Overton window. It's not acceptable to be at 7.5%. So what do we do about that? That's the question. Right? How do we solve that? And I think the Fed, again, I'm not an economist, but the Fed has kind of painted all of us into this corner. And they have to, and I think the number one job of them is to control inflation. That is the job of the Fed. And now we're at 7.5%. It's not transitory, obviously. And how do you resolve that? Do you pull back on QE like they have been? They should have probably done it sooner, you could argue. But the concern is, does it stay at that level? Does it go higher? Well, if you look at the PPI, the Producer Pricing Index, everyone that's selling goods or services, if you try to book a hotel or a flight or anything or buy food today, those numbers are going up. And that's up 10% year over year. And the month over month is increasing or accelerating. Right. So I think there's more headwinds ahead.
And you can't run a business by, you have payrolls that aren't going up as fast. Right, inside these operations, not just our own, but all these operations, starting to impact people. Not giving any legal advice, tax advice, anything like that, but what do you see the run, if there is a runway on any appreciation? Is it happening, or is it?
I think, interest rates matter, right? Okay. You can see some, over the last 2 decades specifically, you can see some inversion as interest rates spike, transaction volume decreases. That's expected. I think if you look at cap rate compression, specifically in multifamily and industrial, that's happening. So the question is, what's left? And I think what capital is sitting on the sidelines, and you could argue that a lot of the smart capital is still sitting there waiting. And then you look at, if you look at what Peter Linneman said with Willie Walker on Walker and Dunlap's podcast a few weeks ago, he eloquently stated that banks today, the modern bank, they have $39 trillion of reserves sitting and waiting. And what are modern banks designed to do? They're designed to lend to asset buyers. So basically, the only thing standing in the way of that $39 trillion in the next investment, probably in industrial and multifamily, is the stress test for banks. Now, we all don't know what that really is, but if they don't pass the stress test, they just have to raise more capital. If they pass it, they can deploy. So I think there's a long runway ahead in terms of asset appreciation, because multifamily and industrial are the darlings. You can see the allocation classes change over time from office and retail to these two. And you see it in Phoenix with job growth, the expansion area of 303, and how much momentum we have from, just say, previous cycle. If you look at our jobs from 2007, peak jobs, 2007, pre-Great Recession, versus October of 2021, we actually have 41% growth in industrial trades and utilities. So you can tell that's happening. So I think there's a lot of runway.
$250 a door per transaction. Does that make sense? Where are we at today in Arizona?
I had an owner that purchased a deal in late 2019, and it was $331,000 a door. Beautiful Class A deal in North Scottsdale. If you look at the Q4 transactions from last year, there was 3 80s transactions, 80s vintage deals that traded above 330. So it's doing this. Yeah. So are you seeing more runway? Potentially. What I can tell you is the capital, the phone calls, all arrows lead to Phoenix is accelerating. It's not decelerating. So I think no longer are we considered really a tertiary market. You think about where capital comes from and what do they focus on.
Right.
Internationally, it used to be the major metropolitans, LA, Houston, DC, New York. But I think Phoenix is on the map.
Yeah. What are there things that you look for as early indicators to get out in front of, like pricing, peaking, or anything like that? And I know you get a lot of calls from people all over the place. So.
Sure. I won't share all of the trade secrets, but certainly if you look at transaction volume, we know that pricing does not peak until after transaction volume, and that's usually 6 to 24 months depending on cycle. So if you go back to my original point, if transactions are accelerating in 2022 despite having a record number of transactions in 2021, you could argue that peak pricing's not here yet and is still 2 to 3 years away.
Yeah. And so a lot of times people, you guys have a system and an architecture, and you've invested a lot of money, I know, in beefing up the business so that technology and the data is in place. So you're talking about things that you have your own data set, right, I'm sure. And so how do you get away from the get people out of the emotional buying process where they're chasing, headlines or trends, or they're seeing momentums, and into the data? How do you get people to think about where do they get the data if they don't have it? I guess.
I think that's a hard question to answer. I think about just think of your circle of five. We all have it, right? Close friends or people you're talking to, and I think back. So go back to the previous cycle. 2004, 5, 6 was a frenzy. More so than it is today.
Right.
And it was almost, you'd look at your friend of, your circle of five, and if one friend didn't have a house, they were renting, you're like, what are you doing? Yeah. Man, you got to do this. You're going to get appreciation. You're going to create all of this wealth. And I don't know that those are the conversations today, but I can tell you being a renter today is not frowned upon like it was then. But there still is that emotional, I think, movement. So I had a few friends move from Seattle recently, and they kept telling me they had to have a house, right? They have to have a house, and they're getting outbid by all cash buyers, 15, 20, 25%. And I said, well, do you really have to have it? Right. Like, what are the fundamentals behind that other than the emotion? So I think if you can shove that aside momentarily and just really look at the data, I mean, there's free data accessible. You can go to ARMLS, you can look at different resources, but I think, being really focused in on what your investment objectives are and the why behind it, that matters. Yeah. And I think this sounds really simple, but because of the market today, and I've had groups call me, we just need to place money. We just need to get this deal. Like, we don't care what it costs.
Right.
I think that's a wrong fundamental way to look at investment, right? So do they meet your investment objectives? I think that matters, whether it's personal or if you're looking at multifamily or an acquisition guy. Right. Really dig in and grind and look at the details, right? Yeah. Because in a compressed cap rate environment, a couple $100,000 off translates into a big miss. Right. I'll just say it that way.
Without disclosing who and how and all that stuff, but you get, because of all you mentioned before, all arrows point to Phoenix. There's a lot of news around companies investing in this area, and so it's natural for people outside our area code to ring up those that have a deep understanding of what's happening in the market. Take me through some of those conversations. What are they asking? Any trends you're seeing there from people?
Yeah, a few things. So I think I'd want to talk about who's calling from the investor side, and then from us having now almost 22,000 units under management. Who's looking at marktaylor.com, who's pursuing Phoenix from a living perspective. So maybe I'll start there. We, again, back to the data, we canvass Google Analytics often for marktaylor.com. We're really trying to understand. The question is the environment of in-migration accelerating? We know it's all job specific, but is it accelerating, decelerating, and if so, from where and how? So if you look at our top 10 searches, we did a year-over-year study, 2020 to 2021, and oftentimes 2020, early specifically, there's a lot of internet activity, right? A lot of search because people were at home.
Right.
Obviously, 2021, we've gotten out into the public more and more, so it was interesting to see LA remain number 2. Out of our top 10 searched markets, right. Just behind Phoenix, and then Las Vegas was number 7. But maybe most interesting was the change in major Texas metropolitans. So Houston, Dallas, Austin, all above 100% increase in terms of search. Now, I'm not saying they moved, but that's, inquiring to marktaylor.com in Phoenix.
Right.
And then I think predictably, you had Seattle, Portland, Minneapolis, Chicago, New York, all increasing to about 50%.
Wow. And what are talk to us a little bit about the investment platform you guys have. Like, who do you serve? You mentioned you've developed your own units. You also doing third party?
Yes, about 85% third party.
Only luxury or just?
Only Class A luxury, yes.
Okay.
Yes.
So who's that ideal client? What does that look like for you guys?
So I think we have a pretty broad spectrum. So if you back to the investment side, so major institutions, Goldman Sachs, UBS, down to mom and pop investors.
Right.
I think it's important that it's not really, is it institutional or private? Is it someone that aligns with our philosophy in terms of Class A, 5-star service, all of those things? I think today, if you see the momentum of calls or volume or people looking at Phoenix, it's not just Southwest, it's national and international. And what I mean by that is if you look at 2 of our most recent clients, they're getting major equity from Hong Kong and Japan. So I think Phoenix is no longer like, oh, where is Phoenix? I heard it was by LA, right? Or its little sister. So there's momentum internationally, I'd say, from a capital investment standpoint.
Yeah, and tell me about your team. You have a whole team to support your own operations as well, but what's different about the approach you're taking?
I think we look at it as you have to have a component of white glove, but it's really I've mentioned this to you in the past. Our core strategic initiative is people. Right. So what that means is we're investing heavily in their growth, education, and investing in them. And we're building a platform to really allow them to grow. So what I sit down with new hires every Monday, which I love, and I get to tell them, who we are, what we're doing and why, because I think it's really important that everyone knows that within an organization. We're not a large organization, 640 people, but they have to know that. And then they have to know I'm going to invest in them. We're going to invest in them and their future and growth. So let's just say in 5 years they leave us. I hope that's not the case.
Right.
But if they leave, they're more educated. We've invested in them personally, professionally. They have a better skill set from a practical perspective. And if they're going to go run a company, they can say, hey, you should go work for Mark Taylor.
Right.
It was a great organization because of the things they helped me learn and grow within.
Yeah, and you are probably doing this with your customers as well, residents. I mean, people move, but you get that boomerang effect too. I mean, you guys have been in the market for a while, so.
Yeah, it's interesting. I think, from an employee base, I do new hire every week, and I have a checkbox on my desk. How many of my new hires are back for a second or third time? And I only had 6 weeks last year where an actual employee didn't come back to us. So that's a boomerang effect, right?
Yeah.
Grass is greener or life changes. And I think for residents, they're speaking to us in terms of they love our service. So our turnover was an all-time low in 2021. I know that's partially market conditions, but they still have options. They can still go elsewhere.
Right.
It matters. It's like voting. They can, with their checkbook. And I'm proud that they've really looked to Mark Taylor as the leader. And I think if you look at, just again back to Google, 21% of our traffic is typed into a browser directly, Mark Taylor. So I think people search for us. There's a brand recognition component in Phoenix and in Las Vegas, and that matters to us.
And you mentioned that's a great indicator of you're doing great with the brand is when they are searching. I mean, they have to know that to even ask that, right? And then, of course, you have all the data when they come in. Do you find that matters? I guess, depending on how you structure a deal, in a lot of cases you guys are operating or developing stuff, but if you had that in place for an operator and you're you're trying to compete on getting offers accepted, all that matters, that trust, that credibility, all these searches, to when they get that offer, they're like, well, who's this group?
Right.
Are you guys thinking about those things?
I mean, I think all of that matters, and I think, we look at that as a partnership. So how can we help someone that's in the acquisition state of mind? It could be an existing client, it could be future or possible clients. I think understanding the platform that we provide, understanding our demographic, understanding the breadth of our demographic, we have really large wallets. You know, our average household income is arguably the highest in the market. You know, I don't know that unequivocally, but it certainly creates pricing power for them. So as they look at their modeling and they understand what can I bring to the table for this asset, because everyone has a whisper price, or, you know, here's the go-in cap rate. Here's our looking at T3, T12. We signed, you know, X amount of, you know, $3 a foot on the last 30 leases. But, you know, how do you execute? How do you bring programs and services and technology to that resident base to support that continued low turnover, and then willing to pay a bit more to stay in your building?
You heard earlier in the session around sort of the flexible living and all those things. Are you seeing, I mean, obviously being in Class A, you're probably seeing more of that than others, but what comes before that marketplace is what they mentioned was the access control and the tours and security and all that type of stuff. How do you see that playing out in people that are making decisions today? Are investors asking about those things? Are they still just looking at cap rates and pricing and those elements?
Starting to. I think, you know, we have to listen to our residents, and I think the two folks you had on earlier were fantastic, and it goes back to always questioning your existing model, never saying, no, this is the way we do it, we're stuck in this mindset. So our leases today say exactly what they said. No, you can't do this, you can't sublease.
Yeah, I look at it like the Uber days of the airport saying no, you know, and then finally the customers are like, wait a minute, you know, they'll figure it out. Even hotels are structuring drop-offs, and they've figured out how to work within it. But at some point, everybody wins. But so the lease, so that's very and fairly, you know, safe. You know, we're trained to be sort of risk adverse. And we also have a data of pains, you know, like that gone before us. Right. And so it seems natural that there would be that hesitation, especially when things are really, really successful. I mean, when people are doing really well right now, it's like, why would you want to disrupt that? But at the same time, you know, this is where everything is going. So how do you make that shift and get to the comfort spot? Is it beta testing? Is it slow rollouts? What is the framework that you think about moving forward?
Yeah, I think you have to listen to the consumer, and you think about what's kind of if you look at today over the next 5 to 10 years, you know, what's kind of the early adopter stage, and it's smart home in terms of technology, access points, you know, how do people move around? It's very important. I think about, I'll use an example, you know, we were the first to bring package lockers to the industry with Amazon in 2014. And today I'd say, you know, lockers are okay. They serve a purpose, but can you get that package to the door? Product like Fetch, as an example. But how do you listen and then adapt? So today there's, I think, less than 2% of the market share in terms of smart home. And we did a deep dive with our consumers, our residents, true like assessment review, and we had about 62% of our residents say they want smart home technology of some sorts.
In a survey? In
a survey, yeah. We did a sample survey of about 2,500 residents, and it kind of fits with what we're hearing from our leasing consultants and teams on site. We have to listen and we ask those questions. So I think today you can get away with not having it. So think back to...
Because of the demand.
Right. Think back to broadband, right? So we also launched the first Cox gigabyte community Santurvisi in 2014. Today, having a gigabyte download speed is not considered a technology shift, right? It's just, okay, great, you have it.
Of course you do.
So I think forward thinking, you know, will we be ready for 10 gigabytes? That's important, future-proofing your community. But also, will we provide the right technology and service? And I think it has to be collectively augmented from both a personnel perspective. I don't think we just go dark and not have someone in the office. That doesn't make sense to me. That's not an experience. So an experience is personnel with the right technology. So having smart home, but allowing Patrick, who wants to tour at 7 p.m., go in through an open path type source. So you can just walk up with your phone, you're already approved. And the door opens. And it gives you a guided tour to wherever you want to go. If you're going to tour a model, amenity space, Google Home or Alexa's in the unit, you can trigger that if you want to hear more about the unit or pricing, what have you. And it's allowing you as the consumer the experience you want. Now you still might have the traditional person saying, I want someone to walk me around, tour me, kind of do the hand-holding, give me the true lay of the land, real in-depth details on the submarket and the community and why you should live here. And that's great, but we got to meet our consumers from a 24/7 model, in my perspective. I'm not saying people have to tour at midnight, but if you're on Amazon.com, you can order anything you want at any time of the day. So thinking more in terms of being open for business at more times, but augmenting the service through personnel and the right technology.
So there's the viewing of it, and then there's the actually to the property, to the unit, access into it and all that. Are you doing anything interesting around the tour process where they're doing the research and they're narrowing down their spots? I mean,
I think
there's all the Matterport and the video and all that stuff. But
I think that's still early in terms of what that will be at some point. Right now, we're just trying to figure out how we provide the right service.
Yeah, and I
from
think
a time perspective.
Also, you look at customers or renters, and like even I always pick on the automotive industry because it's easy, and we all at some point go a day without seeing a car, right? It's a very known product, and now Tesla comes along and intercepted the dealer model, where in Carvana, I think it is, and and even Turo on renting cars. I mean, there's different uses of how the customer's trained. Like Amazon trained a lot of customers on the things that if we wanted to introduce, like they did all the work first, so it's easy to say, this is how it's going to work. And so, but for many years, there's never been the presupposition or the expectation that I'm going to go to this unit and experience this. But now you're seeing those properties come on with those technologies. What do you think the driving force will be? Do you think it will be the customer, or is it just going to be like another way to find lift, efficiency? I mean, if I'm a leasing agent, I'm like, okay, where do I fit into this? And between you and I think there's some remarkable opportunities. If I'm a leasing agent, I'm going to lean into a lot of really cool stuff, and I'm not going to be at risk. But if I'm a CEO and I'm like, okay, how do I get to my yield without pushing pressure on rents? And maybe there's something there too as well. So I don't know if it's the customer or the...
Well, I think it's a blend of both. I think you have to listen to the customer, and I think by augmenting things with AI as an example, and what we built in our Hobbs tool, and allowing, Hobbs essentially answers 60 or 70 of the same questions every day through the natural language that he's learning and developing, and which is fantastic, right? It's machine learning. But do we allow then for time for that leasing consultant or manager at the community to have a real in-depth conversation with whatever that is? Meaning they're supporting the resident in their needs. They don't need to know what a pet charge is, but they might have something that they want to discuss in terms of moving to another unit or downsizing or transferring to another community. I mean, all of the things that go beyond the scope of an AI type tool. So I think allocating more customer service white glove experiences for them. So today we do scheduled appointments, right? So that we can, you don't just have to walk into the office like the old model and say, oh, I hope someone's available so I can have a conversation. No, it's like a doctor's office. You have a 2 o'clock appointment. You get 30 minutes with our manager to ensure that we're focused on your...
This works at the gym too, if you have an appointment.
That's right. It does.
You end up growing more likely. You know what? I had a thought here as you're talking about this. I mean, Apple. I have an Apple iPhone here, and I mean, they sold us something we didn't know we needed until. And I always look to them as innovation and anything else. But when I think about the Apple, have you been to the Apple store lately?
I have.
Okay. So all the red shirts running around, but there's not a lot of sales happening in there. Like the customers come in ready to buy, and they're helping them buy. Like, do you want this much data, or the max? You want
understanding your needs, right?
Right. And so I'm wondering if that's like more of that role, like you mentioned as you discussed the leasing agent's role. It's like I don't need to inform them on these other things because my brand can now consistently at scale be sort of selling. All the time, but when they come in, we make sure they get a nice experience. And
that's right, and I think
like
so.
Apple store.
No, I just finished Hubert Jolly's book, The Heart of Business. He was the former CEO of Best Buy. I think he took over in about 2012 when Best Buy was acting like Circuit City and going this way. And he talked a lot about his reinvention of Best Buy. And one of their biggest issues was they were overselling, and they didn't have competent folks as what he'd call blue shirts in those specific spaces. He did a lot of things that were real smart, in my opinion, and aligning with the Amazons of the world and the Apples. But what he focused on a lot was the experience. So what did the customer have for an experience when they walked in? And it was never about, I'm going to upsell. It was about understanding what the need of the customer was. So maybe you don't need the best computer. You might just need this based on what you're trying to solve for.
Like, wait a minute, you didn't try to.
Right. So there's a great quick story. So a mother and a young child who was like 5 years old comes into the store, and his dinosaur that he had bought in the toy department had a broken head, and he was in tears, like, I need to get this replaced. And two Best Buy associates jumped over and started conversing amongst themselves and say, hey, we'll take care of him. We're going to do surgery because it's your dinosaur. We'll make sure he's back to health. So they took him behind the desk, and they acted like they were doing surgery, and they just grabbed a new one and handed the new dinosaur to the child. And of course, what happened? He's like, oh my God, you saved my dinosaur.
Wow.
Mother was ecstatic. Right. And they left that store feeling, what? Fantastic. Yeah. Do you think they're a return customer? Absolutely, because they had a great experience.
Emotional connection.
So I think you have to find a way to create that experience for a customer, for a resident, and it can never just be, well, we're going lights out on leasing office. There's no interaction.
Right.
I don't see that being an experience-based process going forward that will be successful.
More risk for that reward for sure. Well, tell me what we're coming up towards the end of our session here, but I'd love to learn a little bit more about what you're excited about. What's next?
I think, as always, technology, right? So you go back over the decades, and from the base computer in the 50s and the microchip and
Are you
the
curious?
internet.
I mean, you're reading books about these experiences. Like, do you think the future real estate operator of these portfolios are more tech-driven than previously? I mean, obviously.
I think they will be.
Yeah.
I don't think they're there yet. I think it's still, what's your cap rate, what's your return? But I think technology, we are in a revolution, right? So you think about the metaverse. You're selling real estate in a metaverse, NFTs,
blockchain,
AI, memory, blockchain, digital currency. So there's a lot of things that are, I think, just on the very beginning stages, and will revolutionize things that we do, right? So it'll be the, really back to 2010 when it was the mobile net, right? So everyone's on their phone now.
Right.
But what's next? And how do you future-proof your buildings? How do you ensure that you're plugged in from a technology perspective, and you're ensuring that residents get what they expect? And I think in 5 years, if you have a hard key, and you're supposed to go into your unit with a key, and you're supposed to have that in your pocket, people are like, what is this? What's happening?
Yeah. Does this go in my Apple Wallet? We have young children too, so we get some funny questions around some of these things that we get used to as customers, So internally, are you doing, you mentioned your Monday meetings with your people and working with the employee experience and things like that. What are you doing to develop that next leader within the organization to think like that? Like, there needs to be, you guys already have the advantage of the data and just being technology focused, but how do you train, I guess, that when the technology is moving so fast?
I mean, it's difficult, right, to stay with the practical component. I think for us, we always have to take a breath, pause, and say, okay, what's most important today from a practical perspective? So building training around that, but also, I think, infusing the curious nature of our employee workforce. So what do they want to learn about? It can't just be property management. And what I mean by that is, we have a growth mindset, and I used to, I was really focused on unit growth in 2016. Now I'm focused on people growth. And I think that will translate into other strategic initiatives, including unit growth. And we've invested heavily in our San Casa, which is our training and learning development platform. We've just inked a deal with LinkedIn Learning to ensure that you can do that. If Patrick wants to learn about art in his free time, he can. And I think it all goes back to investing in you. And that's a partnership. So it's not just about 9 to 6, you punch a clock, you're part of Mark Taylor, then you go home and it's just your time now. No, I want to support you 24/7. So we've created MT Fit, which has evolved into now, how do we help you financially? How do we help you with personal things? Because it is personal. It's a personal relationship, and I want them to grow as a human being. That's really it. So how can we help them do that? Yes, I have to provide practical skill sets, but if you're interested here, what does that mean? What's your purpose?
Yeah.
Are you connected to the organization through your own purpose and our purpose? And if you are, you're probably going to be here a long time.
Right.
And we'll be successful.
That's awesome. I love that journey. So let me ask you this final question, and this comes from, just the world moving so fast. How do you move through a decision that maybe you've made, maybe not you or the company or what have you, and things didn't always work out? So maybe we tried, we were those curious ones. We took a leap and did the technology, and then it's like, well, wait a minute, that didn't, well, you mentioned like even the Amazon lockers and stuff.
Sure.
It's not that that's not working, but like, if you had if there's CEOs or executives out there listening, and they're settling with this pain in some cases. I talked to them in our innovation council, and it's like, we did that, and we're never going to do that again, and we end up creating more resistance and like, well, let's just wait and see what everybody else does, kind of that mindset. How do you move through those decisions that maybe on the onset didn't?
We've had lots of fall flat on your face type moments, and I think that's part of growth, experience, and learning. Right? Experience is just failures that you've collected over time. Right? Now I'm going to do this. So ensuring that you learn from each experience. And I think for us, we don't have to be the earliest adopter of everything, but if we see something that we value, it aligns with our company's vision and mission. Let's go after it 100%. And I think that separates CEOs, companies that do things really well. Now there's a vetting process and ensuring that it fits your business model, but go after it. I don't know, there's too much hesitation sitting on the sidelines, and what I do know to be true is it's not always perfect, right? It's never perfect. So if you have this grand vision of it's going to be right here, it's never going to happen. Yeah. So lean in, go about your way in terms of knowing you're going to fail to some respect, but don't use that as an anchor going forward. Say, well, now I'm not going to innovate, or I'm not going to push myself in this direction when the next thing happens. Yeah,
I do hear it, believe it or not. But I think everybody should build some software because it's never done.
That's right.
The world moves fast, but it sounds like you've created some really nice fail-safe environments that encourages those risks and curiosity around things, and ultimately the end user, the customer, the investor, all those people, they get to benefit from it. So that's awesome. I love having you on. I wish I could spend more time. Next time we won't wait a year.
No, please, no. I love being here.
Yeah. And you're right here in our backyard. But this has been awesome. If there's anything we can do to help support your success, of course, we're right here for you.
No, I think I just ask you to keep doing what you're doing, because listening to Richard and Kayla, it's things like that help us get out of our rut in the road and say we really have to look at our business model and constantly say, why are we doing this? Does this make sense? And what's the consumer telling us? So I appreciate what you do.
Yeah, no, absolutely. And our goal with all this is to extract the knowledge from people that are doing great things like yourself and the other guests that we have on here, and then bring the event to them. So that allows us to reach more people more efficiently, and everybody can spend time with their teams, families, and business units. But awesome. Thanks for coming in.
Thanks for having me. It was great.
Awesome. All right.